Good afternoon, everyone. I'm here with Larry Armstrong. We're here to talk to you a little bit about reverse mortgages today and how they can work to help you in your downsizing efforts. I'll let Larry introduce himself. Thank you for joining us.
You're welcome. It's good to be here. Right sizing is something that I've heard you talk about.
Sure.
In terms of people making intelligent decisions about how and where they want to live and what have you. It's an evolving conversation at the same time. I am Larry Armstrong, and I'm the Colorado and Wyoming branch manager for reverse mortgage funding. Reverse mortgage funding was spun out of MetLife Bank after the housing crisis, and all we do is reverse mortgages. Same leadership from MetLife, same crew across the country. We're in 50 states, and we are in terms of 2019, the #1 issuer of home-backed securities in the reverse mortgage space. And we're proud of that. We enjoy doing that. I have a team of 4 loan officers like myself here in Colorado, and we are licensed in multiple states as well.
Well, Larry, how did you get into reverse mortgages?
Oh my goodness. In multiple earlier careers, because oftentimes you hear that we're not going to continue in the same career 40 years and get a gold watch.
Right.
I did incidentally retire at 64 from MetLife and got this gold watch. After only a few years, but it was because they had transitioned the company in the form that we did, and it was a nice gift.
Sure.
To make a long story shorter, I started my career in local government. I have a master's in public administration and 12 years in city management, 13 years in shopping center development and management. And in this whole time, I became more and more interested in housing. And being a leading edge baby boomer, born in 1946, I talked with my wife about this, and she said to me, we ought to look at a reverse mortgage for ourselves. And we did. And we ultimately bought our dream home, a single level ranch in a nice neighborhood, old neighborhood in Denver, and have since been able to help people grow confident as they approach retirement and into retirement, so that their assets they don't outlive their assets. So reverse mortgages were wonderful. I spent a great deal of time with the National Home Builders Association here in Colorado with the Denver Regional Council of Government, helping them work on their housing plans, the national and Colorado builders, helping them understand the needs, the wants, and desires of the boomer population, the 55 plus population that you've addressed in terms of some of the age appropriate housing that is proliferating all over Colorado over years.
And we've talked in the past, and you made that allusion to right sizing and really the baby boomer generation, and how this baby boomer generation once again is changing how we perceive living into your older adult years, being active well into your 70s and 80s.
That's right.
So why would anyone consider a reverse mortgage?
None of us, myself included, ourselves included, really plan on or want to plan on making mortgage payments well into retirement. Let's just say theoretically that your retirement is at X and your housing cost is Y. You only have the marginal difference there to enjoy your retirement in. Most of us want to make sure those assets last. Why would you use a reverse mortgage? But because number one, for those of us who are 62 and over, you can buy your next home for as little as 50% of the purchase price, full purchase price, including closing cost and what have you, and have the option of never making another mortgage payment as long as you live in the home.
So you're talking about a reverse mortgage purchase?
Yes, for purchase.
Very good.
And this came out, you asked how I got into the business. Because of my background with local governments and with builders, MetLife was very interested in having someone help them with this new program called the Reverse Mortgage for Purchase that was authorized in 2008 and rolled out in 2009, and is probably one of the best kept secrets in mortgage businesses, because it's very challenging to get the word out to everybody. So that's why I welcome this opportunity as well.
Good.
From the standpoint of aging in place and staying in our existing homes, that's the classic example of using a reverse mortgage to stop making a mortgage payment and free up that cash flow, create perhaps a line of credit that grows as a result of that, and that is there to help with any kind of an emergency or a calamity that might come about or something that we just didn't plan on.
Sure.
So it was that concept, and when people said, wait a minute, I want to move closer to the kids or the grandkids, couple of statistics I love. The number one reason that people 60 plus move to Colorado, what would you think it is?
You would think either the mountains and the weather, or you'd think kids, right?
Kids,
Yeah.
absolutely. It's the kids, and it's the fact that we probably didn't do as great a job with the kids, but we get a chance to spoil the grandkids.
Right.
And that's a cutism, if you want.
Sure.
The other is that AARP tells us that 86% of all their members would like to continue to live in a home of their choice.
Right.
And that's a very important thing. Today, 30% of all people who are 60 plus that buy a home buy a larger home. Mm-hmm. Some of them buy a home that is better, may not be as large, but it's better configured.
Right.
Doesn't have as many walls and hallways and that sort
Right.
of thing, so it lives better, entertains better. And after all, that's what we worked hard for.
We really talk about downsizing doesn't mean getting smaller.
That's
it
right.
means living the way that your life is.
That's right,
Your life
absolutely.
is. So I think one of the things I talk about with my clients all the time is those misconceptions around reverse mortgages. Like why do reverse mortgages have such a stigma around them?
Well, I think part of it came out of the era before they became federally insured and regulated.
Okay.
There was a period when reverse mortgage loan officers weren't licensed.
Oh wow.
That same period of time, if you can believe this, financial advisors weren't required to be licensed. So there was a kind of a perfect storm. And
Sure.
there was some abuse of this concept that was out there. It made sense to use to tap the equity in your home.
Right.
But there were some issues that were associated with it that needed to be corrected. And so a group of senators and House of Representative members, Congress members, worked together across the aisle, what a concept today, right? Worked across the aisle to create this model that was highly regulated, highly structured, and protected seniors. It basically said, we have to have something that is trustworthy,
Right.
that our older Americans can feel comfortable in and not be anxious about.
Right.
And in 1988, President Reagan signed that piece of legislation. I had worked on the Hill for the Ways and Means Committee earlier, and to see a piece of legislation go from introduction to the president's desk in 11 months, historically never happened.
Right.
And that happened because it was very important to make this happen. Since then, the product has just grown, and the program has grown. It has become safer, much more regulated, so much so that my wife and I, did it ourselves.
Right, right.
And because for the last 7.5 years, I haven't had to make a mortgage payment.
Wow.
Go figure.
Wow. So let's talk a little bit about that. So you have someone who right now is in a home they've been in for, let's say, 25, 30 years. That home has increased in value. They bought it for $125,000 and now it's worth $515,000.
Right.
They paid off their mortgage, but it's a 2-story house. It's got a basement, that's where the laundry is. They find a ranch that they want to move into. How would the reverse mortgage purchase work then? How does that look?
Well, first of all, age of the younger borrower.
Okay.
Basically, this is an actuarially based program, so
Right.
normally you and I are going to predecease our spouse more than likely. Okay? So we want to make
The
sure.
men will die before the
Yeah,
women.
yeah. And there's a whole lot of stories around that and jokes around that, but we're not going to go there.
That's right, because our wife stresses out, basically, is what it is.
But what happened is the person says, I want a home that I can live better in.
Right.
And they've worked with the Steller Group and they've found a home that they really like. They put their home on the market. They don't have to have their home sold in order to qualify and be approved and be able to better negotiate, have you help them negotiate.
Sure.
Because they're approved for anywhere from basically from 45 to 60% of the purchase price as a single one-time down payment.
Okay.
And they never make another mortgage payment, just like they weren't making them before because they had no principal and interest payment. They owned their home free and clear.
Right.
They still were obligated to pay their taxes and insurance
Sure.
and maintain the property, whether it's individually or through an HOA or what have you. So they would have those continuing ongoing costs, but that's why a person would do it. They free up what would normally be a mortgage payment, or particularly interesting for those of us, you just mentioned a person who's sold a home for $500,000+, they can free up, let's say that they were 70 years old and they were going to get comfortably 50% of the purchase price. So they go out and they buy another home better suited for their needs and wants, closer to the kids, what have you.
Right.
And they're going to pay $400,000 for it. Well, at 50%, that means they only have to bring $200,000.
Right.
Guess what happened to the other $300,000? Instead of paying $400 cash for it
Right.
and having $100,000 available to them, now they have $300,000 totally available to them. Goes directly into their safety net, can even be created with a loan program we have that has a line of credit with a guaranteed growth rate that matches whatever the amount is on
So that $500,000 house then helped them buy that new house.
Absolutely.
Cashes out that nest egg, and then you use that nest egg to work for you.
To work for you to continue to grow, and hopefully the growth in that money is even more significant. It's an incredibly powerful thing. I'll just give you a quick example in our own case. We paid $620,000 for our home 7.5 years ago. It's in a nice neighborhood in Denver. It's now pushing $1 million.
Wow.
We have a reverse mortgage that has a total balance on it of $370,000. So I have net equity of $630,000.
Right.
I had a line of credit that we started because I didn't take the money out and spend it on something else. I left it in the growing line of credit. It started at $82,000. It's now at $154,000.
Wow.
In 9 years, when my initial term life insurance policy and initial home health care, long-term care policy, both more than quintupled in payment cost, my line of credit will be greater than what that term life insurance benefit would be. And my wife doesn't have to push me out in front of a pizza truck to take advantage of it.
That's right. Well, this has been a great information for our viewers today. What is that first step they should take if they're thinking about getting a reverse mortgage?
Well, one of the things I'd like to do is share our website.
Okay.
It is www.hecmco, that is HECM CO, stands for Home Equity Conversion Mortgage Colorado.
And you'll see that link below.
That'll be great. Go to that site, click on Buying a Home,
Okay.
and you'll be able to walk through this whole process. The other thing is that we are able to meet in this day and age virtually now.
Right.
So whether it's through Zoom or go to meeting or any number of other things.
Right.
Our phone number, I believe, will probably be on the trailer as well.
Yeah.
So we look forward to reaching out, responding, answering questions, communicating. I love this business.
Yeah.
It's something that I continue to plan to do until I'm not able to do much of anything else.
Sure.
Because it's great to be able to help people achieve their goal of freedom, live in the home they want to live in,
Right.
and work with professionals like the Steller Group that really get it. Because that's one of our biggest challenges, is making sure that all of the referral partners that we have out there,
Understand it
whether
as
they're
well,
financial
right?
advisors,
Sure.
CPAs, what have you. Our largest source of referrals has been financial advisors and CPAs, because they know where their clients are and what they need to do.
Well, knowledge is power.
That's
and that's what
absolutely
these videos are all about, is, know your options. You're sitting on a nest egg one way or the other if you own a house in Colorado. The fear always is, I think, with any financial product like a reverse mortgage, is that, what happens if the economy tanks? Reverse mortgages now, since they are federally insured, that you are protected there. And trust me, I know your kids want mom and dad to be in a house that they're going to be happy in, and if that means being closer to you too, a reverse mortgage purchase can be a wonderful thing.
That's right. And just as an example, you mentioned some calamity situations. People that had reverse mortgages when Houston flooded or when Paradise, California burned down continued to receive their benefits.
Is that right?
Yeah. Their line of credit continued to grow at the same rate that their loan balance did, so that's federally required. That's a protection for people. It's just this non-recourse nature means that neither the borrowers, parents, nor their heirs can ever be upside down, can ever be underwater. Pardon the pun, a Houston reference, I guess.
Right.
But in so many ways, it is a perfect tool for those of us who are 62 and over and want to own and live in our home.
Well, thank you for coming today, Larry. It's great information. I appreciate it.
I'm glad to have done it. Thank you.